Let's explore a world of financial empowerment and honesty where your wealth works for you rather than standing still. Imagine a world in which the pleasant buzz of dividends filling your accounts takes the place of the jingle of loose change in your pocket. A world in which achieving financial freedom isn't just a pipe dream, it's a real accomplishment that is within your reach. This is a realistic objective, not just a wishful thought. As everyone has a different idea of what a good retirement looks like, there are many different financial avenues to explore. Some people may consider tactics such as selling property, taking out a reverse mortgage, or moving to a cheaper area. Living off dividends from investments, on the other hand, is a lesser-known strategy worth considering, as it has the potential to generate a monthly income of $3,600. Stay tuned, as I'll now show you 3 effective ways to achieve this goal by the year 2024. So what's the secret to finding out how much to invest effectively? Ultimately, it all comes down to your ideal way of life and the numbers. Although the average person can spend around $67,000 a year, this amount may not apply to your particular situation. It can be customized to meet your own requirements, goals, and comfort level. Now let's add a pinch of mystery. Imagine a life in which the money you invest produces a consistent stream of income, allowing you to enjoy the results of your hard work without having to use up all your capital. It's like having a secret money tree that keeps growing and paying dividends all by itself. The opportunities are intriguing. Recall that the goal of this journey is to find the ideal equilibrium that fulfills your desires. Think about your ideal future self and the lifestyle you want to lead. Then let the numbers guide you toward the investment amount that will turn dividends into your ticket to financial freedom. This talk will show you how to reach the $3,600 monthly or $43,200 yearly milestone. Let's first examine the idea of dividends and how they work. Imagine yourself as a shareholder in a company because you own its shares. When that company makes a profit, you have to make choices about how to use it. You can choose to reinvest in the company's growth or distribute the profits to the shareholders. In the case of listed companies, shareholders like you are entitled to a share of those profits, known as dividends. As a shareholder, you receive a dividend based on your shareholding. Dividends can manifest as cash, either through digital transfers or checks, or they can be reinvested in additional shares of the company's stock. Companies follow varying schedules for dividend disbursements, with many adhering to a quarterly frequency. Now, let's delve into dividend yield. This metric gauges the dividend earnings relative to the stock price and may fluctuate across companies and time frames. Typically, established companies offer higher dividend yields compared to newer, smaller ones. Calculating dividend yield is straightforward. One divides the annual dividends per share by the price per share. For instance, if a stock is priced at $100 per share and yields $10 in dividends annually, the dividend yield would be 10%. Comprehending dividend yield aids in investment evaluation, enabling comparisons across various stock prices and informed decision-making aligned with one's goals and risk tolerance. By investing in dividend-paying stocks, one can potentially earn regular income without liquidating their shares. This facilitates a consistent revenue stream while preserving the investment corpus, a truly appealing prospect. For you and others interested in passive income, dividends offer a compelling strategy. They present an avenue to augment wealth over time and sustain oneself through investment-generated income. Now let's explore 3 straightforward strategies to realize the goal of earning $3,600 monthly or $43,200 annually through dividends. Strategy 1. Covered call ifs. Among the swiftest routes to living off dividends is investing in covered call ifs. These unique funds afford investors the opportunity to earn income from both stock appreciation and dividend payouts. How does it work? The ETF invests in stocks while simultaneously writing call options on those same stocks to generate supplementary income. Call options confer the right, though not the obligation, to buy a stock at a predetermined price within a specified time frame. When the ETF sells call options on its portfolio stocks, it accrues premium income distributed to investors as dividends. Furthermore, if stock prices exceed the call option's strike price, the ETF may realize capital gains upon selling those stocks. Several popular covered call ETFs, such as Zild, OILC, and Use, offer attractive yields, often in double digits, surpassing those of many traditional dividend stocks. The allure of these ETFs lies in their ability to furnish income from dividends and option premiums, culminating in a stable and dependable passive income stream. Nonetheless, it's imperative to acknowledge the associated risks. Options may expire worthless, or fluctuations in stock prices may impact overall performance. Now let's apply this strategy to your journey. In pursuit of $3,600 of monthly income, equating to $4,300 annually through covered call Fs, adjustments are necessary based on prevailing yield levels. A requisite investment ranging from approximately $280,000 to $310,000, a compelling proposition when juxtaposed with the substantial investment requisite for traditional dividend stocks to yield commensurate income. Opting for covered call Fs offers a viable pathway to realizing the financial objective of earning $43,200 annually or $3,600 per monthly without necessitating an exorbitant investment outlay. This strategy proffers an avenue to engender a steady income stream while minimizing capital requirements. Thus, for those eager to embark on this trajectory, exploration of covered call Fs as a conduit to dividend-based sustenance and financial autonomy is advisable. Let's explore an alternative route to earning $43,200 annually or $3,600 per monthly through dividends. Strategy 2. This strategy involves investing in specialized entities known as real estate investment trust REITs. REITs function akin to teams investing in real estate properties, malls, offices, apartments, among others. These entities generate revenue from property operations and distribute a portion of it to investors. For you, several commendable REITs exist to consider for passive income generation. Notable examples include Two Harbors Investment Corporation, Brandywine Realty Trust, and Orchid Island Capital Incorporated. These REITs boast a track record of furnishing investors with consistent income streams via dividends. Historically, REITs have exhibited robust performance, averaging an annual return of 10.8% over the past 2 decades. This implies that investing in REITs can serve as a prudent means to potentially augment wealth while accruing a reliable income. It's crucial to acknowledge that dividend disbursements from REITs may fluctuate based on factors like occupancy rates and economic conditions. While REITs offer the potential for greater returns than conventional stocks, they also entail heightened risk during economic downturns. To ascertain the investment requisite for earning $42,000 annually from REITs, assuming an average annual return of 10.8%, an investment of approximately $410,000 is warranted. However, this figure may vary based on the selection of REITs and diversification strategy. A prudent approach entails consistent savings and investment, allowing dividends to accumulate gradually toward the desired objective. With steadfast commitment and patience, financial independence could be attained within 5 to 7 years. When pursuing dividend-based investments, meticulous planning is imperative. Establishing clear financial goals and adhering to a well-defined plan aids in selecting optimal REITs for portfolio inclusion and ensures adherence to the investment strategy over time. Given the unique circumstances of each individual, the requisite income to sustain one's desired lifestyle may vary. REITs hold an advantage over conventional stocks in that they frequently disperse dividends on a monthly basis, rendering them even more appealing to investors seeking a dependable income source from the stock market. By embracing the strategy of investing in REITs, the financial objective of earning $42,000 annually or $3,600 per monthly from dividends can be realized. This strategy holds the potential to transform the aspiration of living off dividends into tangible reality. For those poised to embark on the journey toward financial independence, exploring the realm of REITs represents a prudent step, a strategy with the capacity to actualize dreams. Strategy 3. Dividend Aristocrats. These are esteemed stocks belonging to a select group of companies within the S&P 500 index. To earn the esteemed designation of aristocrat, a company must have consistently raised its dividend payouts to shareholders for a minimum of 25 consecutive years. They stand as favorable options for individuals seeking income from investments. Prominent dividend aristocrats include 3M, Leggett & Platt, and Walgreens Boots Alliance. These corporations, on average, yield close to 7% in dividends, and offering lower than covered call Fs and rates, but characterized by unwavering consistency in dividend payouts. Dividend aristocrats are renowned for their perennial dividend increases. Membership in this elite group signifies a company's robustness and resilience, coupled with a demonstrated commitment to rewarding shareholders. Their diversified industry presence, coupled with a track record of sustained growth, renders them appealing investment prospects. Moreover, their status as large, established entities diminishes the likelihood of acquisition by other firms and augments their ability to weather economic downturns. To attain the desired $3,600 per monthly income, given a 7% dividend yield, an investment of $600,000 is necessary. so substantial compared to conventional dividend stocks, which necessitate a $2 million investment for equivalent returns. This represents a fractional investment with equivalent dividends. A prudent approach involves diversifying investments across several dividend aristocrats to mitigate risk. By investing in dividend aristocrat stocks, the investor has the possibility of receiving regular income from their investments. These stocks have a history of sustained dividend increases, reinforced by their inclusion in the S&P 500 index, which lends credibility to their performance. To accelerate progress towards your dividend yield goals with the right specialized knowledge, follow the channel to continue learning more about all the investment trends and how to save your money.